Welcome to Retirement Decoded with your host, Scott Tucker, where we break down the complexities of retirement planning to give you clear, actionable advice. Whether you're just starting out or getting ready to retire, Scott's here to help you make informed decisions and secure your financial future. Tune in each week as we simplify the process and decode the path to a stress-free retirement. Now, here's your host, Scott Tucker.
And we're back. Welcome back to the podcast, Retirement Decoded with Scott Tucker. I'm your host, Scott Tucker, TuckerRetirement.com. Here we are in the podcast studio, and again on today's episode, instead of Andre Hootie. Now, Andre Hootie, our Associate Advisor Andre Hootie, has not been fired, okay? So we have here on podcast microphone number 2, we have Associate Advisor Max Wren. Say hello, Max Wren.
Hello, Max Wren. I remember that.
Yep. So getting the hang of this podcast thing. So Max, we have a question. I should have pre-read this a little better. This is from Bill. So Bill says, Max, I'm thinking, what is this? Oh, here it is. No, I got it. It's got a whole bunch of like intro, outro. Okay, so Bill says, Max, any suggestions on how to consolidate a portfolio without too much variation in the relative prices? I don't know what he means there. Consolidate a portfolio without too much variation in the relative prices. I wonder if he's talking about consolidating the custodians, like maybe he has Schwab here and Fidelity there and Vanguard there, or I wonder if he's talking about the positions within an account. Let's see.
Yeah, I'm not sure.
Well, he says, Max, I'm thinking for exchange-traded funds or ETFs that I'll sell and buy after market hours or before market opens to prevent any timing issues during the day. He's thinking too hard, isn't he?
Yeah, definitely.
So, Bill, as you likely know, I don't know what you know, Bill, but as you may know, and maybe not everybody knows, the mutual funds, they're valued at each market close. Now, the ETFs, Bill does make a good point, though, I think, Max. I'm trying to mind read what he meant to say when he wrote the question. The ETFs, they're kind of tied to the underlying securities, but if there's during the trading day, if there's a big disruption in the market volatility, you might be buying lower or higher than what you think you are because things are moving too fast. The computers can't keep up.
Yep.
So, okay. For mutual funds, I will put in orders to buy and sell during the day since they will actually occur after hours. Okay, so he got that. I have funds that are too similar with too much overlap. Okay. Well, Bill, Max, why does Bill have all these funds with all the overlap?
That's because he's holding funds that are like ETFs and mutual funds that have thousands of investments inside them. So
we had a gentleman and his wife come to see us recently. We're in Chicago, and we help folks in person or virtually, and we're federally licensed. We help folks all over the country. But we had a gentleman come to us, and he goes, well, I've got this firm downtown Chicago, and they've done okay. But then I have this play money. Max, they always say they have this play money, right?
Yep.
And so what he did is he bought a bunch of NVIDIA. And, smart guy, different profession, not an investment guy. But that can cut both ways. You can buy the hot stock and it can pop.
Yep.
You can buy the hot stock and it can crash. There was a thing back in, nowadays it's probably 25 years ago. There was that Enron thing.
Oh yeah.
And it was a high flyer until it wasn't. And then it turned out to be kind of a house of cards and nothing there, and they went bankrupt. So just because something's on, let's say 60 Minutes, like 60 Minutes did a thing on NVIDIA, and this gentleman who came to see us recently, he and his wife, he had this play money, he called it, and he did all the investing, and she did her job and kind of just took care of the bill pay type stuff. And he said it himself. He says, I've done really well, but he goes, I kind of just got lucky with this NVIDIA, and he got to where he just owned a ton of NVIDIA. And then we did a something we do. We run Morningstar report and a Riskalyze report, stock intersection report. And I don't think Max, he's not a dumb guy, and I don't want to say he didn't realize, but I didn't get the idea that he realized he owned NVIDIA in his non-qualified account that he was running himself. And then he also owned NVIDIA through 3 or 4 different mutual funds. So he owned way more NVIDIA than he thought because you have a mutual fund, exchange traded fund, whatever. You don't realize all the different ways you own NVIDIA. He owned NVIDIA like 5 ways.
Yeah. We see that all the time, Scott. I mean, number of time I sit down with folks and they have probably 10, 15 different ETFs and mutual funds, and you look at that overlap, and oftentimes you'll see Microsoft, NVIDIA, Apple, And you'll see these weightings of 5+% just because they hold that same stock in all their different ETFs. So
we've had folks and smart people, but some of these things got out of control over a number of, over the decades. We have a gentleman who's a retired Chicago fireman, and he came to us and like $1.5 million saved for retirement, and he has a pension and things from the Chicago Fire Department. But the firemen, they get in Chicago, they work 24 hours, they get 48 hours off. So then they usually have a side job. So if they just keep working a lot and keep being sleep deprived, they can make a lot of money because they have their day job and their side gig, and they're oftentimes very good savers. But he came to us with like $1.5 million saved for retirement, but $1 million of it was Apple stock. And I said, I like Apple too, but I didn't. You don't need I was like, I don't own $1 million iPhone.
Yeah. Apple's the one where you see that sometimes. You'll sit down with
people fall in love with it.
That's all they hold is Apple. And I just kind of looking at them like, okay, well, what are we going to do here?
Hey, I own the iPhone and the MacBook and the AirPods Max and the AirPods because you never have enough AirPods and Maxes. And then you got the iPad. You got all this stuff.
The watches.
You're already plenty invested. I'm too old to have an Apple Watch. I have to have the wind up. I got to go old school.
Old school, yeah.
Yeah. And also, I think the iPhone is probably disruptive enough. I think if I had the phone buzzing on my wrist every 2 minutes, it'd probably drive me insane.
All your ADHD would just be out of this world.
That's how you get locked up in a loony bin. But yeah, so Bill, you've got overlap from your mutual funds and your ETFs. And Bill does make, I don't know what the point is, but Bill does make a good point. The mutual funds are valued at the end of each market day. The ETFs trade during the day, but there can be like I guess the word I'm looking for is dislocation.
Yeah.
So there's a lot of market volatility. You might buy an ETF where you think you could be off low or high on that valuation, and it could just be a mess.
Yeah. And beginning of the day, you're going to see a lot of people who queued up market orders the day before. So that may skew some volatility. And then depending on the end of the day too, you'll see some people are kind of watching a position. Maybe it spiked or maybe it went down a lot. And they kind of, I'd say, this feeling where they need to get in or get out. So usually you'll see a little more volatility towards the end of the day too. So,
Max, that's a good point. So there could be tumult and chaos over the weekend, let's say, and people could be placing orders Friday evening, Saturday morning, Sunday evening, all this stuff, and all these orders get queued up. And maybe you're buying at market price, and depending on the order flow and how you rate and how you don't rate, you might think, I'm buying at market price on this ETF when the market opens, but it could swing wildly by the time your order is actually processed at market price.
Oh yeah, yeah.
Whereas if you bought, and we don't want to be. We're not high frequency traders, and I think folks ought to be investing for the long term, not making a bunch of short term tactical stuff. So maybe we should beat up on Bill for that. Bill, you should be making a bunch of short term tactical moves. Whereas if you bought the mutual fund based on the Friday close, right? So that might be a way in times of high volatility you might do better on the mutual funds. But Bill also, because I don't want to give anybody the wrong idea, we shouldn't be making a bunch of changes just because there's volatility in the market. We ought to devise a long-term plan for our investments for retirement, and we ought to stick to that plan. Max, of course, one thing we do for our clients at Scott Tucker Solutions, what we do is we do quarterly rebalancing. So you picture a pie chart, and you've got so much stock, so much bonds, or so much this, so much that. There may be an asset class that grows in price, and you may have other parts of the pie chart that shrink because something else is out of favor. Quarterly, and this should be done quarterly, not emotionally. So on the first trading day of each quarter, we sell off some of our winners and buy some of the stuff that's out of favor. So that's the way that we make sure that we buy low, sell high, so to speak, because the stuff that's doing really well, you actually ought to prune that tree a little bit. You ought to sell some of the stuff that's been doing well, which is counterintuitive. Nobody wants to do that. That's how they end up with $1 million in Apple stock, right?
Yeah.
So you got to sell off some of the stuff that's doing well and buy some of the stuff that's out of favor. That rebalancing keeps your investment allocation on track, keeps you from owning too much of something. And by selling high to buy low, you're buying low to sell high.
Yeah,
but most people don't do that with their own money.
No, almost no one does it. They kind of do the opposite, kind of what we were hearing about with that person with NVIDIA. So
you know what people love to do, Max?
What?
They love to sell low and buy high.
Yeah, every single time.
If something they own falls, they sell it, panic. And when something's sky high, like the NVIDIA will be sky high, and say, "Oh, I gotta buy that. Look how good it's doing."
I kind of like using this analogy. You know, picture you go to the grocery store. Are you going to want to buy something when you see the price has spiked up 100%, or you want to buy it when it's on sale, right?
Yeah, that's funny.
Yep.
Yeah, they'll do it. People will do it right with groceries. They won't do it right with their life savings.
Right.
That's interesting. So Bill is now thoroughly annoyed with us because we told him all the stuff he thought was true is wrong. And
I'm sorry, Bill.
No, Bill actually made some good points, but we don't want to be Max. A lot of folks, when it comes to their financial planning for retirement, they think their opportunity is in the buying and selling and all that. And what we see so much is that your biggest opportunity might be in tax planning for retirement. So what I mean by that is, Max, as you know, 90% of the people we see have 90% of the retirement savings in tax-deferred retirement accounts like traditional IRA, 401k, 403b, deferred comp, TSP, SUP, simple KEO. So if 90% of your retirement savings is in tax-deferred accounts, that means 90% of your retirement savings, you've never paid federal income tax on it.
Yeah, you're exposed to taking tax bomb right there.
And then do you think, Max, once you retire, do you think the IRS just lets up and they just let you spend that money tax-free?
No, I mean, a lot of people, unfortunately, though, just kind of listen to the government and let them tell you when to take it out. So,
oh yeah, the required minimum distributions. Yep. Getting your 70s, and oh boy, that's a tale for another time right there. Well, you've wasted yet another perfectly good number of moments listening to a short bald man, namely yours truly, Scott Tucker, and my sidekick, Associate Advisor Max Wren, on the Retirement Decoded podcast. We will catch up with you on the next podcast.
Scott Tucker Solutions, Inc. has a strategic partnership with tax professionals and attorneys who can provide tax and or legal advice. Neither the firm nor its agents or representatives may give tax or legal advice. Individuals should consult with a qualified professional for guidance before making any purchasing decisions. A Roth conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The views and opinions herein are those of Scott Tucker Solutions, Inc. and do not necessarily reflect the views and opinions of AE Wealth Management, LLC. Investment advisory services made available through AE Wealth Management, LLC. AEWM and Scott Tucker Solutions, Inc. are not affiliated companies. Insurance products are offered through the insurance business Scott Tucker Solutions, Inc. Scott Tucker Solutions, Inc. is an investment advisory practice that offers products and services through AE Wealth Management, LLC, a registered investment advisor. AEWM does not offer insurance products. The insurance products offered by Scott Tucker Solutions, Inc. are not subject to investment advisor requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying ability of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Scott Tucker Solutions, Inc. is not permitted to offer, and no statement made during this podcast shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Scott Tucker Solutions, Inc.